let me start sharing my screen again. When you're trading on derivatives, always make sure when you're logged in, you switch to Ethereum. Okay, you still have everyone here. That's very nice. Okay, so when you're trading, always make sure you've clicked Ethereum, because if you select Bitcoin, then that means you want to leverage on Bitcoin, but you're not leveraging on Bitcoin. So always make sure you selected Ethereum. And then here's another thing you have to keep in mind. When you selected Ethereum, please always make sure you selected perpetual contract. But by default, it's always going to be on perpetual contract. But just to make sure, when you want to trade, make sure that you're looking at the perpetual. You selected the perpetual contract. That way, that's actually where you're going to be trading. So always make sure you select that. And there is also something I'll really show you quickly here. How do you calculate your quantity that you're going to be trading with? You do that by coming here. Always make sure you're using Ethereum to calculate your quantity. So we can just please take note of that, to always make sure you've selected Ethereum, that is ETH, when you're calculating your quantity. It's actually USD and Ethereum, but make sure you're using you've selected Ethereum. So this exchange is actually a margin leverage exchange, and I just want to quickly make sure everyone can hear me. Please, can everyone hear me? Can you unmute your mic and let me know if you can hear me?
Yes, I can.
All right. All right, that's fine. I'm muting Mr. Wole and Mr. Elochukwu. All right. All right. So this is actually a margin leverage exchange, and what that means is that you can actually be taking notes on this. Anyway, it's recorded, but if there is a point that you want to take note on, you're actually free to do so. This is actually a margin leverage exchange, and what that actually means is that when you enter a trade, it automatically puts you at 50x leverage. 50x. So what that means is that by every percentage value that Ethereum makes, you make 50%. That's what it means when we say put you on 50x leverage. By every percentage value that Ethereum makes, you make 50%. So let's say Ethereum makes 1% move in the traditional market. Since you're doing leverage trading here, you actually make 50%. And if Ethereum were to make 2% gain or 2% move, you make 100%. And if you're trading to the downside, what we mean by trading to the downside is you can go long, you can go short. What that means is if you're trading and you buy Ethereum, you're trading and you click the price you want to buy, and I'm going to explain what this means, limit and market. But if you're trading and you buy, that means you're buying to go long on Ethereum. And when we say go long, you're buying at a certain point that the price of Ethereum is going to go up. And then when you're selling, if you're selling and you click sell, that means you're buying, you're actually selling or you're shorting. Shorting means that the price of Ethereum will go down, so you want to short. And this is actually what traders do when they are trading Ethereum. In the regular market, like every regular trading or in the traditional market, if you're trading, then you buy a coin, maybe you buy Ethereum at this price here, $330, and you want Ethereum to go up in price. Yeah, that's a normal traditional way to trade, and it goes up in price to $349 and you make some profits and you say, okay, oh, that's nice, I made some profit, and then you sell. That's how it works in the traditional market. But when you're doing margin leverage, even if the price is falling, you can short the market and still make profit. So this is really a nice thing about leveraging. So in the traditional market, for example, if Ethereum is going up in price, that's only when you're in profit. But if it's falling and you're stuck on that trade, you're actually not making anything. You're actually losing if you're holding the coin, except you sell at a certain point. And so for margin leverage, when the price is falling, you can actually short the market to make profits. And if the price of Ethereum drops by 1%, if you're shorting and the price drops by 1%, you've made 50%. And if the price of Ethereum drops by 2%, if you're leveraging, you've made 100%. Well, however, you need to be able to understand where the market trend is moving. So you know exactly what direction you should be trading to. And what we mean is, if you're trading, always make sure you know what direction the market is trading to. For example, a person might feel I should short. I need to sell so I can short the market, that the market is going down. And then eventually the market ends up going up, and then you miss that trade. So you have to exactly know what direction you should be trading to. So is it going to the upside or is it going to the downside? So if you know what direction the market is trading to, is it going to the upside or is it going to the downside? And there are actually a couple of techniques that we use. I'm going to show you that technique close to the end of this class. You won't learn everything once, but I'm just going to give you an idea of what we look at when we're trading, to know what direction the market is trading. That's the most important part of trading. When you're leveraging, you have to know what direction the market is trending to. Is it going to the upside or is it going to the downside? So you put yourself in a position where you're trading to the right direction to make profit. If the market is going to the upside, then you trade to the upside, you make your profit. If the market is going to fall in price, you know what direction to trade to. You short, so you make profit. So that's very important when you're trading. At the end of this session, I'm going to show you where to look at that will tell you what direction you should be trading to. Is it the upside or is it to the downside? All right, so that's about that. Another thing I would quickly like to mention is, while you're trading, this part I'm about to tell you is really very important. I just want to quickly show you this. It's called the limit order here. You have the limit order, you have the market order. Now, what this means is, the limit order is you want to buy or you want to sell at a particular price. So if you're selecting the limit order, let's say Ethereum right now is $312, but you want to buy at, it's exactly 312.1. Now it has gone to 311.94. Say, for example, you want to buy at 311.65. Then you use your limit order to execute the trade. That is, you want to buy at a certain price or at a set price. You want to set the coin to buy, the trade to buy at a certain price. That's when you use your limit order. And then the market order here, you want to get in or you want to get out right now. That means Ethereum is 311.67 dollars. You don't want to buy at a set price, at a certain price. You just want to buy the get in on this trade at this certain price. So you use the market order. The reason why you make use of the two is maybe you want to buy and you feel, okay, I think, like we noticed, it was around $312 earlier, but you feel, I think it will drop a little lower than this. Then you use your limit order to execute your buy and your sell order, to buy at a certain price that you choose. But the market order, you don't choose it. It's exactly the current price you'll find Ethereum. So that's exactly the limit buy and the market order. And I'll just mention this quickly. When it comes to leveraging, your position size will actually be determined by your equity balance. And if you can look at this here, equity, which is the total value of all your assets in your account, the total value of all your assets in your account, and then the available balance is the initial margin. That is that part of margin balance still not reserved as margin for your open orders and positions. That might sound strange, but the point is, while you're looking at the equity balance and the available balance that you have, if you want to get in on a trade, you don't use every single Ethereum that you have to get in on a trade. You don't use the whole Ethereum that you have to get in on a trade. The reason is because Warren Buffett once said, you don't put both of your feet on the water if you want to test the depth of the water. You just use one of your feet. So let's say, for example, in your equity balance, you have, for example, you have 10 Ethereum and you want to get in on a trade. You don't use everything. You don't use everything. You simply use a certain amount of Ethereum. What I would highly recommend is always use 10% of your equity balance of what you have. Just use 10% of it. The reason why you're using that is because if you're getting in on a trade and you use everything, this is actually trading, and if price is dropping and you're using everything, that means you don't actually have something left which you can get in. You're losing funds, so you use a fraction of your balance. So if you have, for example, 5 Ethereum, you're leveraging with 5 Ethereum, you could just use 0.5 or use just 1 Ethereum to enter a trade, to take a position. That's actually safe. And when you're doing that, then it reduces the risk for you when you're trading. So that's actually why it's really very important to not use the whole of your balance when you're trading. Yeah, so just always remember. And something else that you should keep in mind too when you're trading is, since you're given times 50 of whatever you're using, this actually explains why you don't have to use your whole balance to get in on the trade, because that's greed. I know sometimes what could make you be tempted to use everything that you have on the trade is because you feel, okay, if I use, since it's times 50, if I use, for example, if I have 5 Ethereum and I want to use 5 Ethereum, that's times 50. I'm going to make more profits. Well, that's actually true, but if the trade goes against you, that means you're losing more. So that's why it's really important to use not to use your whole balance. And the point is, even if you're using just one Ethereum, you're giving times 50. And so if you just go to Ethereum, what you're seeing here, ETH, there is something you can just see here. Let me go up to the limit order. If you're using just one Ethereum, you're giving times 50 automatically. You can actually type this here. The exchange will calculate it for you. You can see below here, it's telling you, if you can see my cursor here, you're using one Ethereum. So if this times 50 you're looking at here, if when you want to trade, you just type 50 because that's the leverage you're given, and it will tell you the number of Ethereum you want to use to enter that trade. If you don't want to use one Ethereum and you just say, okay, I like to just use maybe 25, it gives you 0.4. So in your balance, you're using 0.4 to enter this trade. But the point is, if you take note of something, you can actually see how much you're given here to trade, $15,582. However, you have just one Ethereum that you're using to leverage on this trade. And when you think of this, if you're using $15,000, that's actually huge. Although you have one Ethereum, but you're giving times 50 of one, which is $15,000. So whenever Ethereum is making moves, like you notice the price now is $313. So if you had entered at a certain point, if you were trading and you wanted to long, and you bought Ethereum here at 309 and it has gone here 312, It has actually gained $3. So if you were actually leveraging at this point, maybe you just wanted to get in and get out quickly, you would have made about $150 in around 5 minutes. So that's actually the power of leveraging. So that helps you to see why you shouldn't even bother about using your whole balance, your whole equity when you're trading, because you're given times 50. So there's really no point in you making use of everything. And if in 5 minutes you could actually jump in on a trade and make $150, I mean, if you want to calculate that, let me just quickly do that. $150 should be around, I think, 50 something thousand. 150 times 360, yeah, about 54,000. So you don't have to really be greedy, guys, because if you're greedy, most persons who are greedy don't really make profits in the market, because you end up losing. You're getting on a trade about 5 minutes, you just want to quickly do a swing trade. They call it swing trade when you're getting in and getting out immediately. It's called swing trading. And in the space of around 5-10 minutes, you swing and you make $150, you make 54,000. I mean, isn't that enough? So it's really important to keep your greed in check, because greed is actually what will make you lose in the market, because you'll be thinking, oh, I've made $150, I've made 54,000 in just few minutes, and then I should stay more on the trade because I might make more, and the market goes against what you're thinking. So that really burns you a lot. So it's really nice you keep your greed in check. So once you make profit, it's really important to just exit the trade. And the reason why you shouldn't use all your equity balance is what I've been talking about. It's really important. That's why I'm stressing it. So just always make sure you reduce your risk when you're trading by not using everything. You could just use just one Ethereum if you have up to 5 Ethereum. If you have up to 5 Ethereum, then you should be using one. Don't use everything. Just use about 10% of your equity balance, or of the Ethereum you have. You always make profit on this if you're careful with your trades. Even if you're trading with 0.5 Ethereum, you're still giving times 50. The point is you always make profit. And so, say for example you're trading and you're making around, just by explaining how you could have made about $150 just now by longing, by going long. That really tells you can make so much profits with this. But then if you're making weekly, you have a target and you're making like maybe $300 to $500 weekly when you're trading, and that's about 200K. That means in a month you're making like 800,000. You can actually make more than that. It's just an example. You can make more than that if you're trading, depending on your style of trading. Yeah. So actually, let me just quickly mention this. As I'm talking about making profits, I did mention earlier, if you were getting in at this point and getting out here, could have made about $150. But the purpose of this course is not to help people see. Of course, this is very profitable, but it's not to make it look like a get rich quick scheme where you're going to be making profit so quickly. Yeah, you can make profit quickly, but you can actually still lose quickly when you're on a trade. So you have to make sure you have a strategy when you're trading. It's very important to have a trading strategy. And the reason why you're having a trading strategy is this. Let me just quickly mention this shortly before I show you guys how you can know what direction you should be trading to, or what can tell you if the price is going to go up or if the price is going to go down. Having a trading strategy is really very important, because let's say, for example, you want to get in on a certain price and you're trading on a set day, and you say, okay, Ethereum is moving, maybe it dumps like this. Let me use this as an example. Ethereum dumps to around $325, and it left a wick. You can see this thin line here. It's called a wick to $315. And you say, okay, I want to get in at this point. It's $325, and I want to go long. You notice here it went from $325 to about $344. So you really made nice gains. If you don't have a strategy when you're trading, chances are that you're going to feel, oh, okay, I don't actually know what point I'm going to sell. So let me just leave this thing here and see what happened. It went down to $327. So the market actually went up, but because you did not have a strategy of when you were going to exit, it went down again. So it was like, okay, the market went up, but you did not make any profit because you didn't have a strategy. So a strategy is what will help you to know, okay, what point are you exiting the market? This is very important because most of the time, some persons who really don't know how to trade, they just see, oh, the price has fallen, let me go long, and they enter the market, and it actually gives profit. But because they don't have a strategy, then it goes down again and they don't make any profit. So a strategy is what will help you to decide at what point you should be exiting the market. That's what the strategy can do. And so the strategy you could get depends on you. You could say, for example, if Ethereum makes a move of $5, then I want to take that profit for the day. If you're trading with one Ethereum, if you have an equity balance of 5 and you're using one Ethereum to long, that means you have made a profit of $250 if Ethereum gains $5. Remember, if it moves by 1% in the traditional market, it's times 50, you've made 50%. So if you have made $250 in a day when you're trading, isn't that good profit already? You know, the essence of saying this is you don't have to be greedy. If you're trading and you make $250 in a day, that's about 90K. And something you should really keep in mind is if the market isn't moving much, then you should not be going long for a very long time frame. Now, this is exactly what I mean. Let me just show you something with this chart here. Now, you notice from this chart, it's a bit small, so let me increase it a bit. Okay. You notice this date is actually on the 19th. I mean on the 22nd of June, and you're seeing this 23, 24, 24, 25. So it's actually a space of 3 days. But something you will notice here is the market is going up, it's going down, it's going up, it's going down, it's going up, and it's going down, and it's going up and down, up a little, and down in the space of 3 days. You can actually be trading these 3 days and be making profits. But see what I talked about, having a strategy. Someone bought here at this point, it went up. He didn't have a strategy to say, okay, if the price goes up by $5, for example, if that's actually what I want, then I'm going to sell. It went up from $307 and it went to $314. That's about $7 gain. If the person did not have, if this trader did not have a strategy, look at what happened. It went down again. So it was as if he went on a trade, went long, but no strategy, went down, wasted effort. Same thing here. It went up, it went down. It went up and it went down. So if you're trading, maybe you can take note of this, write it down somewhere. If you're trading, if you're leveraging, whether you're leveraging to the upside or to the downside, that is whether you're going long or going short, and there is not much price action. When we say price action, look at this. This is $309, but look at the price gain from 309 to 335, and then it went up to 356. If you look at this was June 25, June 26. In the case of this price action on 25th of June and in 26th of June, the price action it went on a parabolic move. So it went from here to here in just 2 days. If you notice that the price action is not going up like this kind of move, this is just a space of 1 day, you're trading, and you notice the market is not going up like this in a day, then you shouldn't be staying long on a trade. Just have a strategy that if Ethereum gains like $3, I'm not saying that's what you should do, but it's just an example. You should have a strategy that, okay, if I just want $150 profit today because the market isn't really moving and I want to be very careful and conservative on the trade. So if the market gives me $3 or $4 or $5, that's, if it gives you $5, if Ethereum gains $5, then you've made $250 profit if you're leveraging with 1 Ethereum with an equity balance of 5 Ethereum. So if that's your strategy and it meets that target, then you should get out of that trade. So that's actually what the strategy can help you to do, because the market isn't moving, and if the market isn't moving, then chances are that when it moves, it's going to go down. That's for sure. If the market isn't moving, it's going up, it's going down, it's going up, and it's going down. So your strategy will help you to take profits and minimize you wasting your time on getting in on a trade, and you make profit, but you don't sell and it goes down. So that's why it's very important to have a trading strategy. So what I actually told you to take note of, maybe I should just mention it again. If there is not much price action in the market, that is, if the price isn't going on a parabolic move, then you shouldn't, if you're going long, trading to the upside, then don't stay too long on the trade. Just have a strategy that if it gives you $3 gain, then you should be exiting the market. But if you notice the market Ethereum is going on a parabolic move like this, then you might want to have a bigger price move or price action to the upside. What that means is you're not looking at $5 gain because it's going on a parabolic move. So you're just trading alongside with the market trend since it's going on a parabolic move. So in this case here, you should still have a strategy. And what should be your strategy at this point? Maybe I would open the floor now for everyone to give their opinion. If the price is going up, what do you think would be a nice strategy when it's going on a parabolic move like this? What would you put in place as a strategy? So it's actually open for us to comment. So who would like to go first? Okay, Victor, would you like to go first?
Okay. For that kind of move, I feel the individual needs to be online, first of all, needs to watch the market, and to go in and out. For example, let's take a look at 26.
Okay.
Let's look at the last support there before the green week, the long green week.
Okay.
Longer one, yeah. Let's say no, to the right, the two weeks after. Yeah.
Okay.
Now, if I take a trade from here and I'm online, I'm going checking the movement. Now I can decide to go out of the market. Now, without using an indicator, I can use this strategy by going out of the market when it's on the red week after the second long week.
Yeah. You mean this one?
No, to your right.
Okay.
The second green week. No, the second one.
The second green week, which is here.
No, to your right.
Which one are you talking about? This one?
Yes, that middle one.
Okay.
I can decide to go out of that market from there, then pick it up on the 5th week to your right.
Okay.
So I can be doing intervally, going out, going up, going in, going and out, instead
Very
of
good.
staying and know when the thing will come up or go down.
Very good. Very good. Thank you very much for that beautiful that beautiful strategy you have. That's very nice. And you see, the reason why that is so important is because when you're getting in, that it's not like you're just going to be seeing all green candlesticks. It's not going to be all green. It's never all green. But you're going to be seeing green candlesticks and then some red, and then some green, and then some red. So you can actually ride according to the trend of the market. However, when you're leveraging and you're going long, if the price is going down, then that means you're not making profits, you're losing. So that's why it's very important that when you're trading and you're leveraging, have a strategy. Say for example, you bought at this point 309 and it went up to 325, 326, 327. Let's say somewhere around here, 327. If you look at the profits you could have made at this point, it's pretty huge. It's pretty huge. So if you're trading like that and you went from 309 to 327, how much have you actually seen Ethereum gain there? If you just check, it has gained around $18. It has gained around $18. And if you were trading with just one Ethereum with an equity balance of 5 Ethereum, that means you've made a profit of $750 $750. And if you just calculate that, you've made a profit of 270K on the trade, which is really huge. So it's good when you have a strategy. Just know, okay, since I know the market is not just going up, 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 at some point it will go down. Then your strategy is what will help you to take your profit. And once you're in profit and you take your profit, then you've secured your profit. So if it's going on a parabolic move to the upside, then you can actually say, okay, I don't want to be looking at $5 profit since um, it's making a parabolic move. I don't want to be thinking, okay, if it gains $5, that means I've made $250. I want more. That's actually not a bad idea since it's a parabolic move and you want to ride the trend of the market. However, you shouldn't just say, I want to ride the trend of the market, and you actually don't know at what point you should be getting out of the trade. You should know at what point you'll be getting out of the trade. There are some indicators that you can use that will help you to know if the if the trade is going on reverse, if it's going up, whether it's going down. You can actually use moving averages. I'll show everyone that later in the course. But having a strategy in place is what will help you to take profits at a certain point, because you already know that it's not like the market will continue to go up, up, up. At some point, it will go down. So I really can't tell you what strategy you should have, but the strategy should be determined by two factors. One, the first question you should ask yourself is, what kind of move is the market given, or what kind of trend is it going? Is it a parabolic move? Parabolic move is just going straight up, up, up with a long gain, like it went from 308 to 355. That's a very huge move. So if it's going on a parabolic move, then you may choose not to be conservative with the gains Ethereum makes. So that will help you to have a bigger strategy that, okay, I want Ethereum to gain like $15. Should I make a profit of $750 if I'm leveraging with one Ethereum? So that's that for Ethereum if it's making a parabolic move. That will help you to make a bigger strategy that's pretty wide. But if the market isn't really moving, you should be conservative with your strategy. Don't say, I want Ethereum to make $15, so I make $750, because it's not moving really. So if it's not moving, then you should reduce the gains that you feel Ethereum is going to make. Like if it's not really moving, then your strategy could be, if it gains $3, then I think I'm okay with that. I've made $150 if I'm leveraging with one Ethereum. So this is just a short way to help you understand why it's so important you should have your strategy in place. Now, I'll just like to show you, just before we conclude the class today, really all what you have heard, even if it sounds pretty, it's actually pretty basic. This is actually not what the whole class is about. I just wanted to give an introduction to everyone so you can be aware. Some of us, like Victor has been trading before, so he understands the market a bit more probably than some of us, but it's just a basic introduction to using Deribit, to trading here, and to some of the strategies you should have when you're trading.